Welcome to the interest rate section of our video portal for the Mark Taylor Team channel. I wanted to have a great discussion with Kimberly, who's here with me today, to help explain to you, the watcher, exactly how interest rates are working and how they affect you. Never has it been more confusing in the industry, with interest rates changing on an hourly, even half-hourly basis as it reacts to the market. 3 years ago, in fact, up to 16 years ago when I first got in the business, interest rates were so easy to predict. In fact, it really was a mathematical calculation. Unfortunately today, with effects of Singapore, or something happening in Europe, or a Spanish crisis, we have a macroeconomic society that really affects our interest rate. You, the consumer, or you, the realtor watching this, don't always understand why interest rates are going down when you're told they're going up, or conversely, why they're going up and they should be going down. Most people don't understand that bad news is good news for mortgages. So what I wanted to do in this brief little section is explain to you that one, we know what we're talking about. Two, it is now illegal for us to quote an advertised rate, like on the internet or in a newspaper, and that we are legally required as licensed mortgage professionals to ensure that when we quote your rate, it is a factual rate for that day that you, the consumer, can have. So Kimberly, some of the challenges we're always faced with is a consumer would have done their due diligence and gone out and shopped a mortgage. Someone has quoted them an interest rate, and then they call us and we say, well, we can't give you that interest rate. How do you handle a client when they call up and go, hey, I was quoted a 3% interest rate? What do you say to the consumer?
That's probably my most frustrating phone call, because consumers will get an interest rate quote from somebody that's not a licensed loan officer, or somebody that just wants them to call back, and they'll say 3% or 3.5% or 3.75% or 4%, just to get that person to call them back. And when they call me or our team and they say, well, I was quoted 4.25%, my first question is, well, do you have an executed purchase contract? Are you in a position to lock?
What is an executed purchase contract?
An executed purchase contract is signed by both buyer, seller, and within a 30-day window of closing.
Okay, so 30 days, 30 or 45 days, they know that they have to move into the house.
They know that they have to move into the house within that time frame. That is when a consumer is in a position to, in my opinion, ask what interest rates are doing. Until that point in time, I really discourage quoting a rate as a licensed loan officer, because rates move constantly. They move every single day. They go up, they go down. And if I say 4.5% and we have a market fluctuation that changes rates by a half, that consumer is going to be mad at me when they are ready to lock at 5.
Understand. So how do you communicate to a consumer that's talked to a couple of other people and they're all saying 4% and we're saying 4.5? What do we typically do when they talk to Donna in the first place? What have we already done rather than just give an interest rate quote? What have we done for them?
We truly pre-qualify our clients.
But pre-qualification, isn't that just someone going, hey, my name is Joe Schmo and I have a social security number, here it is, and I have a job, and someone goes, 4%? Isn't that what a pre-qual? What do we do differently?
What we do differently is we actually preliminary underwrite the loan.
Very good.
We pull credit, we take the loan application, and then we require the financial documents to back up the loan application that was given to Donna on the phone. We want tax returns, we want pay stubs, we want bank statements, we want 2 years of commissionable income if that's what they tell us that they
But
need.
wait a minute, I just want to go out with my realtor. My realtor won't show me a house until I've gotten, what is it, a loan status
LSR.
report. Why can't I just get that?
Well, because you can just get that from anybody out there. You can get it without doing an underwrite, without providing your financials, but it's not a true qualification. And a real estate agent's going to be mad when you don't truly qualify after receiving an LSR. Our team does not issue a loan status report until you're approved.
Very good. And when we give an approval, we can then give a factual interest rate,
Correct.
which then correlates to a factual payment.
Correct.
And the only thing that we don't control at that point is what their actual taxes are for the property or what their insurance is. So the consumer, after talking with us, which takes about 15-20 minutes,
Right.
and they're fully approved, can go out with confidence and know that they can purchase a home that they've fallen in love with. Because let's be honest, when you go out with a realtor, you'll see a house and you're going to fall in love with something. It's not a question what house you're going to get. You're actually going to buy a house but you need to know that you can buy that house.
Right. It's very important.
Because once they give the earnest deposit, it can be lost, right?
Correct.
Very good.
And we've come across many clients that, came to us in a crisis situation because they were declined or denied by their former lender because LSRs were issued, the homework wasn't done, the preliminary upfront work, which takes a lot of time to do, wasn't done, and then we come in and we do it and we structure the deal and we get it funded.
So basically what we're trying to communicate to you, those of you that are watching this, interest rates are volatile. It's not uncommon for them to move a quarter or half a point within a 2-hour period. We don't want to give you an interest rate just to get you in as a client, to get you into a situation of being committed to a house where you have to close with us. We want you working with us because you know that we're giving you professional advice and that the rate that we quote you is exactly what you're going to end up with at the end of the day when you close on your house. And for those of you still confused about interest rate, let me try and simplify interest rates for you. When you make a purchase decision, when you went out and bought your last vehicle, you had a budget in mind. If your budget was $400 or $500 or $600, you went to a dealership that was based on that payment. You didn't have a $400 budget and go to the Porsche dealership. You went where you knew you could afford something. The same application is correct for buying a house. Concentrate on payment, the interest rate will work itself out. It's what you can afford at the end of the day. So with that in mind, I want to thank you for taking the time to watch this little skit on interest rates. Hopefully it's answered your questions. Feel free to reach out to us and ask us anything that you might need. Thank you.
Thank you.